Bitcoin was the #1 performing asset for Q1 of 2023, up over 30% since the beginning of the year. And its price movement has been decoupling from tech stocks and correlating with gold. So what does this mean? It means that more and more people are flocking to Bitcoin and gold during these uncertain and chaotic times. With the banking crisis, out-of-control inflation, interest rate hikes, the US approaching its debt ceiling, the potential of us on the brink of World War III, these are unprecedented, crazy times. And more people are getting curious about Bitcoin, investing the time to learn about Bitcoin, and are ultimately realizing that Bitcoin is the only asset we can fully own, fully control, that is fully neutral, fully global, fully inclusive for anyone to use anywhere at any time, fully available and operational 24/7, 365, all without third parties. And it is property that cannot be violated by governments, big banks, and big businesses, because other assets can. Check out this big bank and big business man that is trying to rally the government into violating our physical property rights. JP Morgan CEO suggests government seize private property to quicken climate initiatives. In a letter to shareholders, Diamond wrote that permitting reforms are desperately needed to allow investment to be done in any kind of timely way. We may even need to evoke eminent domain. Diamond declared Tuesday that governments, businesses, and non-governmental organizations may need to invoke eminent domain in order to get the adequate investments fast enough for grid, solar, wind, and pipeline initiatives. Eminent domain is a legal term that describes the government using its power to expropriate private property for public use, provided the government provides private owners proper compensation. The government does this all the time with property, and the compensation to private owners is never proper. It's always paltry. And this is another situation of history repeating itself. Back when the US government stole another asset from all of its citizens, gold. How the US government seized all citizens' gold in the 1930s. The government of Franklin D. Roosevelt seized all gold bullion and coins via Executive Order 6102, forcing citizens to sell at well below market rates. Immediately after the confiscation, the government set a new official rate for gold that was much higher as part of the Gold Reserve Act 1934. This was the era of the gold standard, which meant dollars were tradable for an exact amount of the precious metal. Seizing the metal enabled the government to print more dollars to try to stimulate the economy, and also to buy more dollars on the international market to shore up the exchange rate. Many gold owners were understandably unhappy about the gold seizure, and some fought it in the courts. Ultimately, however, the government could not be stopped, and gold ownership remained illegal in the US until the 1970s. This intervention was not unique, even in contemporary history. In 1959, Australia's government put a law in place that allowed gold seizures from private citizens, if expedient to do so for the protection of the currency or of the public credit of the Commonwealth of Australia. And in 1966, to stop the decline in the pound, the UK government banned citizens from owning more than 4 gold or silver coins and blocked the private import of gold. This was only lifted in 1979. See, this is why Bitcoin and other truly decentralized cryptocurrencies and technological systems are important. When people say, I don't understand why we need crypto, it has no use case, it's worthless, it doesn't do anything unique. We can easily just pay banks to store and secure our money, and we can easily pay Venmo, PayPal, American Express, and similar to help us move our money around. Here's the uncomfortable truth and reality of the situation. The banks do not store and secure our money. Without our permission, they use our money to try and earn yield by putting it at risk, where we take on all the risk, and if they lose it, we foot all the losses. Why should we pay banks to pretend like they store and secure our money? This is why we need crypto. Venmo, PayPal, American Express, and similar do not create value and are not contributing to any meaningful form of production. The uncomfortable truth and reality of the situation is that they take a cut of the productivity of others, mainly us, because all they do is simply move numbers around on databases. Why should we pay Visa, MasterCard, Venmo, PayPal, and American Express in order to transfer and use our money, when all they do is literally move numbers around on databases? This is why we need crypto. Bitcoin and other types of cryptocurrency are both value plus a means to store and transfer the value. These functions are not separate like they are with the US fiat currency, where we have to pay third parties to store it and move it around. So we've got banks failing, we have big businesses asking governments to seize our property, we have the Federal Reserve devaluing US dollars, We have useless third parties like Visa and MasterCard that do not create value, who are charging us to move numbers around on a database, who can also freeze our accounts and take our money out of our accounts without our consent, incoming central bank digital currencies that will dictate how we are able to use our money. This is why we need crypto. Hello, I'm Crypto Casey and welcome to another episode of Crypto This Week. Let's take a look at the global news stories in the state of the current macro environment. Please check out our sponsors CoinLedger, iTrustCapital, and Ledger. Get your taxes sorted out today with CoinLedger's cryptocurrency and NFT tax software that will save you time and help you maximize your refund. Invest in and trade cryptocurrencies tax-free with an individual retirement account or IRA with iTrustCapital. And make sure you are taking complete control and ownership of all of your digital assets and cryptocurrencies by using secure cold storage hardware wallet devices like Ledger, which this week they have a special going on where we can redeem some free Bitcoin. So make sure to scroll down and use the link below to access the correct and official sites, as well as redeem any special offers they have for us. Sweet. Similar to the 2008 financial crisis, mortgage-backed securities are struggling. This time due to the Federal Reserve's decisions to increase the cost to borrow money at an unprecedented rate. In the United States, it's common to have a 30-year mortgage with a fixed rate for residential properties. However, with commercial properties, the interest rates for these mortgages are up for renewal every 2 to 5 years. This means after decades of low interest rates, a lot of commercial property holders with mortgages are getting crushed by the high interest rates. And to make matters worse, vacancy rates for downtown offices have skyrocketed since 2020 to almost 20% and on an exponentially rising trend. Businesses and people that own these buildings rely on commercial rent and lease income to pay their mortgages and debts. So that, on top of expensive mortgages and debt, is causing problems in the broader financial markets. Why? Because most of the businesses that own these buildings are small and medium-sized regional banks. What does that mean? Well, the market is predicting a huge wave of commercial mortgage defaults on the horizon. And when you consider the sheer size of the commercial real estate market, a staggering $20 trillion, we will likely face a huge wave of more bank collapses on the horizon. As to stay solvent, these banks will be forced to fire sale these properties in a time and market where demand for them is at an all-time low. Is this all by design? Is the Federal Reserve on a mission to destroy small banks and force everyone to have an account directly with them so they can start ushering in a draconian, tyrannical central bank digital currency system? It is seeming more and more like the case, and we explore it together in this video you can check out by clicking on the link above. And the Fed knows that the mainstream media is losing control over information about things like CBDCs, and is now publicly backstepping by making efforts to clarify the impending FedNow system set to launch this year, July 2023, is not replacing cash and is not a central bank digital currency, by publishing articles and circulating them around social media like Twitter. Note this final paragraph in particular, stating, "The Federal Reserve has made no decision on issuing a central bank digital currency, CBDC, and would not do so without clear support from Congress and the executive branch, ideally in the form of a specific authorizing law. A CBDC would not replace cash or other payment options." Very interesting. So remember from this video a few months ago, exploring how we are currently in the midst of a perfect storm for Bitcoin, with an important election on the horizon where the US president is up for re-election. The entire House of Representatives, 435 seats, are up for re-election. Over a third of the US Senate is up for re-election. And all of those people have an influence over whether or not Fed Chair Jerome Powell keeps his job. They all have an incentive to make sure the market is doing well. And they also have an incentive to keep their corporate cronies happy, as well as voters. So if we as voters do not want a CBDC and want crypto-friendly policies, they will have to capitulate, because there is too much money in the coming years at stake to ignore this new emerging asset class. Big businesses are already diversifying into crypto. This week, Bank of America and Fidelity purchased over $75 million worth of MicroStrategy stock in Q1. Financial giants are bullish on Bitcoin. In 2001, Apple CEO confirms he owns Bitcoin and crypto. This week, in 2023, Apple puts the Bitcoin white paper on every Mac. What's next? Apple is a big, powerful corporation with millions of users around the world, so this kind of thing sparks all kinds of conversations and spreads awareness about Bitcoin's existence and gets people curious. Here's the deal. A lot of big companies that create value and are productive will benefit from Bitcoin, crypto, and the technology at large. So will Apple and other big corporations start putting Bitcoin on their balance sheet? Will they start building payment products and services that engage with the decentralized protocols on the blockchain? Oh yes. And see, a lot of big companies that do not create value and rather take a cut of the productivity of others will be replaced. And if their income starts suffering and they aren't able to buy politicians to save them, we prevail. Crypto is only a fraction of the market cap of one single business in the US, like Microsoft. And as it continues to gain adoption, the valuations of crypto will absolutely melt faces. Big corporations that lobby and pay politicians want to be a part of that. And therefore, in the end, government elected officials will as well. Because some politicians, either on their own accord or possibly because they're already being paid by their corporate cronies to advocate for pro-crypto policy, are starting to make waves. Just in, a bill was introduced in Texas to boost the local Bitcoin economy and protect the rights of holders, miners, and developers. Also, just in, Arkansas House and Senate passes bill protecting the right to mine. And also, Florida Governor Ron DeSantis proposes law to ban CBDCs. So, like we've been exploring on the channel over the past several months now, this is the perfect storm for Bitcoin and crypto, which is why it's so important for all of us to get politically active now to help pro-crypto politicians get elected in the most important US election for the future of crypto at large. Media, politics, crypto, it's all connected, and the status quo is losing control. We are at the tipping point where things can actually tip in favor of the many, of our favor, from the small group of people who have been benefiting from a rigged system for nearly a century. The creation of the Federal Reserve, the most powerful central bank in the world, is enslaving us and stealing from us, which you can learn more about in this video by clicking on the link above. And though some are bearish and don't think we stand a chance, consider this interesting concept known as the tipping point. The tipping point is a sociological idea that suggests a small percentage of individuals within a population can have disproportionately large impacts on the thoughts, opinions, and behaviors of everyone else. It's been noted that a mere 0.25%, yes, less than 1%, in fact, the square root of 1%, is the percentage of people that can affect mass change on an entire society. And check this out. As of 2023, it's estimated global crypto ownership rates at an average of 4.2%, with over 420 million crypto users worldwide. 4.2% is 1,580% more significant than the 0.25% of a population needed to affect mass change by influencing the thoughts, opinions, and behaviors of everyone else. And get this, in February 2023, a new survey of 2,000 plus American adults suggests 20% of the US population owns crypto, and the vast majority see an urgent need to update the financial system. Get this, 20% is a whopping 7,900% more significant than the 0.2% of a population needed to affect mass change by influencing the thoughts, opinions, and behaviors of everyone else. And also when factoring in the Pareto principle, or 80-20 rule, a concept that suggests that roughly 80% of the effects come from 20% of the causes, one could argue that since 20% of Americans own crypto, we might be responsible for a significant proportion of the influence, possibly around 80%, on the broader population's perceptions and adoption of the technology. Our degree of interconnectedness among each other, the strength of the influencers in this space, and the growing receptiveness of the larger group from all this inflation, bank failures, etc., all affect the percentage needed for significant change. We, the 20% of crypto owners in the United States, are the most engaged, knowledgeable, and passionate about the technology, meaning we all have a strong influence on the remaining 80% of the population. So we need to actively share our experiences, educate others on the benefits of Bitcoin and other cryptocurrencies, encourage businesses to accept digital assets for transactions, and together we can help shape public opinion and propel cryptocurrencies toward greater mainstream acceptance. So as crypto investors, we need to be sharing information like this, help others see the light, stay positive, and also make sure we are maintaining a balanced investment portfolio overall, because diversifying our wealth is more crucial than ever. Treasury bills, stocks, bonds, real estate, gold, silver, Bitcoin, Ether, and also consider the unique, time-tested, uncorrelated asset class of fine art with Masterworks platform. Art is one of the oldest asset classes there are. In fact, Sotheby's is the oldest company on the New York Stock Exchange, nearly 275 years old. So people have been trading art for centuries. Typically, only the ultra-wealthy have had access to fine art investments until now. Masterworks removes the barriers we would otherwise face if we tried to invest in art on our own, because the costs are extremely high for the average investor. So they take this very large asset class, which is roughly $1.7 trillion, and make it accessible to a wide range of investors with their platform that transforms physical art into share-based ownership. Here's how it works. Masterworks uses their expertise to select and buy art that they believe to be investment-grade paintings. Then they file it with the SEC, similar to how a company goes public, And finally, they sell shares of the painting, which allows people like us to own fractions of pieces of fine art. So this is the first opportunity for anyone to invest in multi-million-dollar artworks, and Masterworks has become so popular that there is a waitlist to join. However, if you use the link below, we can skip the waitlist and start diversifying our investment portfolios into this unique asset class today. So scroll down and check it out. Awesome. So if you would like to learn more about how Bitcoin works and why its revolutionary technology can help us maintain power over some of our wealth, check out this video. If you would finally like to have that Eureka moment about how cryptocurrency wallets, seed phrases, and private keys work, check out this video. And to skip the Masterworks waitlist, click on this link on the screen. Like and subscribe for more. Be safe out there.